Tata Consumer slides 5%, the top Nifty gainer after a mixed fourth quarter. Domestic revenue growth meets estimates. Margins comes in ahead of expectations, but a one-time expense dents net profit. In fact, we'll have the management shortly on the show to discuss the numbers in detail.
Tata Elxsi corrects after posting a weak set of quarter four numbers. Constant currency revenue declines close to around 0.6% sequentially. Brokerages also issue bearish calls on the stock. JP Morgan cuts the target price to 5,800 rupees, while HDFC Securities maintains its sell rating.
In more earnings reaction, we have ICICI Pru slipping more than 3% after VNB margins declined further in the fourth quarter.
Cyient DLM surges as the net profit jumps close to 80% on a year-on-year basis. 361 surges over 6% after earnings beat analyst expectations in the fourth quarter. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. As you can see to the top of the screen, well, all the indices that have come up for you are well in the green. The Nifty is now up close to around 90 points. The Nifty Bank as well is participating. Yesterday, the Nifty Bank did do a bit of a U-turn from around 48,300 odd. So that will be the first level you're looking at, and then 48,500. A beautiful looking screen, Mangalam.
Beautiful looking screen, Nigel. Powered by what kind of music? Looks like heavy metal because a big move is what we're seeing on all the metal stocks right now this morning, actually. JSW Steel at the high point of trade, Hindalco at the high point, Tata Steel doing well. In fact, the metals index comes up for you. That itself is doing extremely well. And giving it company are a bunch of these other names as well. L&T, for instance, the frontliners doing well. Telecom continues to power ahead. A fresh high on Bharti Airtel for another trading session. And in the broader markets, we have some gains in the form of Hindustan Aeronautics, Chola Invest and Muthoot Finance.
Well, that's right, Mangalam. Yesterday, the metals index had a bit of an off day. We were down close to around 0.5% yesterday, so it was a bit of an underperformance. So we're pulling that up. And, a couple of those names actually are really bucking the trend. Pull up Moil. Moil is flying away as we speak. That's the one we highlighted today as well at the start of trade. Massive delivery-based buying. The street is hoping that there could be a price increase that's coming about. So that one as well does spike up to the high point of the day. Big move. I think what's playing out, Mangalam, is that unlock of the China theme, So that's what's spurring sentiment out there. Overnight, you have the dollar index that has cooled off. So that's another factor that works in favor of metals. And iron ore prices have seen a bit of a bump up. In Singapore, that's a traded number out there. It saw a sharp decline. So higher iron ore prices actually are good because iron ore here in India is a little cheaper than what it happens in the globe, and availability is more as well. So it explains why some of these stocks are doing well.
All right. So that's about the way these metal stocks are moving and the markets in general. Sony Patnaik of JM Financial Services joins in for a quick technical check on the market. Sony, a near 650 point recovery is what we've seen from Friday's lows. Closer to 22,461. Where do we go from here? What is your expiry trade for the next couple of days?
Good morning, Mangalam, Nigel. Thank you so much for having me on the show. So as we speak, 22,450, that hurdle is just around the corner, 22,450, 22,500. And any move above this, you can see Nifty heading towards 22,700, 750. So I think that's where we can look at for the expiry. The important thing is that, a lot of put writing has happened at the back of a falling VIX, which is indicating a bullish outlook for Nifty as we speak. So you can see 22,400, 22,300, quite aggressive put writing that has been happening since yesterday. And also the put call ratio of 22,400 has crossed 1.4, which is quite positive. And the declines can happen towards 22,400. The put writers be quite ready to defend those levels. I think Nifty, we can look ahead for 22,700 for tomorrow's expiry. Important would be to look for Bank Nifty from current levels because Bank Nifty is yet to break out of its congestion zone. It's around 48,250, 48,300. That's the zone as we speak is quite a resistance hurdle for Bank Nifty. Any move above that resistance, you can see it heading towards 48,600, 49,000 also can get retested. So I think Bank Nifty can definitely lead Nifty also out of its congestion zone, and both the indices can have quite a positive expiry.
All right.
Okay. All right, sorry, got that. What about individual stocks? What are you looking at?
Nigel, the first would be from the chemical space. It has seen very strong rollovers, the entire sector from April to May series. It's starting on a good note. So Tata Chemicals is a stock which has given a good intraday breakout from current levels. On any declines up to 1130 can be bought, keeping a stop loss of 1100 and a target of 1180 to 1200 can be seen in the stock. And the second stock is from the defense space, Bharat Electronics. BEL also can be a positional buyer, good breakout from current levels. Can keep a stop loss of 220 and a target of 260, 265 for May series.
All right, Sony, thanks a lot for that. A couple of stocks on the buy side, positioning for Nifty at 22,700 for tomorrow trade, and also looking at the Nifty Bank as well. Just probably slip into a short break or talk about some ideas for profit coming in from our colleagues. Just keep an eye out on a couple of stocks from, the defense pack. We spoke about HAL doing well, Hindustan Aeronautics. Giving company on the way up is also Paras Defense, up around 5%. A decent move is what we've seen on names like Bharat Dynamics as well. So it will be interesting to see whether, the usual defense suspects, the likes of BEL, BEML, and, Mazagon Dock and Garden Reach also come by in today's trading session, given the sort of momentum that we're seeing in a couple of these defense names. We'll await any up move out here as well in these broader market names. But let's get you some ideas for profit coming in from our colleagues. This one comes in from Nitin Sharma of Money Control Pro.
Today's idea for profit is GAIL. GAIL India continues to be a winner among the Indian gas stocks and has performed well in the last 1 year. Domestic gas demand has been picking up well due to the softness in the LNG prices, and with government focus on gas-based power plants, gas demand is set to rise further. India's 2030 goal of 15% share of gas in the Indian energy mix has been driving the gas economy and the development of the gas grid. And GAIL, being at the center of it, is expected to benefit the most. Near term, GAIL is expected to report a good set of numbers in the Q4, and this to be led by the transmission and the marketing segments. Further, petrochemical business recovery has also been good this year and is likely to be sustained on the back of cost optimization and availability of reasonably priced input gas. GAIL management previously guided for an FY25 transmission volume growth of 12 to 15 MMSCMD, a 5 to 6% YOY volume growth in the gas marketing segment, along with a minimum segment EBITDA of 4,000 crores in FY25 and 4,500 crore in FY26 has also been guided. At the current market price, GAIL trades at FY26 EV to EBITDA of 7.8 times, which is attractive.
Right, with that, we'll step into a short break. On the other side, as promised, we'll get the conversation with Sunil D'Souza, who's the MD CEO of Tata Consumer, on the other side. This one's on the quarter gone by. More importantly, the outlook for the year ahead. Watching us here on Chartbusters, Tata Consumer is the top Nifty loser in today's trading session. Post the numbers. Let's talk about the management conversation post numbers as well. We spoke with Sunil D'Souza, who's the MD and CEO of the company. Started, of course, by asking him about the key guidance that he has for FY25, and then beyond all the other things, the scalability of the acquisitions, etc. as well. So let's hear out that conversation with the MD CEO of Tata Consumer.
Coming specifically to our targets for next year, the single biggest important objective is we've done 2 acquisitions. One we closed during the last financial year, one we closed just this month, which is Organic India. I think integrating them, we've said that we will integrate it in 100 days. I think that is on track. Capital Foods, front end, back end done, and now it's for value creation. Organic India, we're starting on the front and back ends. Again, we'll complete the whole integration in 100 days. Generating value out of that, that's priority number 1. Priority number 2 would be jump shifting the volume growth in India, specifically focus on beverages. Salt, I think we've always maintained about 5% will be the secular long-term growth in volume. We're at 4, so almost there. The growth businesses, we've said now with Capital Foods and Organic coming in would be 30% of the portfolio. Delivering a 30% growth, I think focusing on that. We've said 15% EBITDA is par now. We've got to improve from there. We've got to continue to improve our working capital days. We've said double-digit top-line growth and EBITDA ahead of the top line. ROCE, actually, last year was a very pleasing figure. Last quarter, we upped by 380 bips, continuing to work on that number. Most importantly, continuing to fuel all the pieces that will drive growth, advertising and promotion, innovation, distribution, and most importantly, building out our talent for the next leap forward.
Right. So let's get a little more specific about the numbers. You said double-digit revenue growth is what you're targeting. If you could tell us, what does that mean? Is it mid-teens, low teens, low double-digit, or above 20% sort of growth that you're targeting? If you could break that up for both India as well as international, and in India as well, what would beverages grow at? What would food grow at?
So beverages, if I take the base core business, Mangalam, volume at about mid-single digits, a couple of basis points on that on value. Similarly for salt, mid-single digits and a couple of points on value. The growth businesses, which now account for 30% of India, growing at 30%, that would be the guidance. And our international businesses, we said mid to high single-digit growth while continuing to deliver top-notch margins. That would be broadly what we would look at.
On international, what kind of margins are sustainable over the next year? And you said 15% is your benchmark for the entire year. Last quarter, you did about 16.1%. So should we see an improvement upwards of 16% in FY25, given the scale-up of your acquisitions too?
So, Mangalam, for the full year, we've delivered 15.3. I would target upward revision from 15.3 for the full year. There will be a little bit of ups and downs, but we're very confident that 15.3 is the base now, and we will continue to improve from there.
Let's talk about Capital Foods. The 2 months that were integrated in this financial year did about 85 crores of revenue. If I was to, look at it being now available in 95% of your overall distribution chain, it amounts to about 120 crores per month in terms of revenue. So are those targets that you're looking for in FY25 when it comes to Capital Foods, around 1,000 to 1,200 crores on the top line? And for organic, what's the revenue target for this year?
So Mangalam, for Capital Foods itself, you're absolutely right. We've delivered about 85 crores of top line for the first 2 months. But you would also remember that the first 2 months, there was a lot of integration work in process. We re-indexed a lot of channel inventory. We restructured a lot of systems and processes out there. Now, going forward, as I said, the focus will be on value creation, distribution expansion, fueling advertising, and most importantly, I think they've got one very strong brand and one decently strong brand, Ching's Secret strong, and Smith & Jones, I think we've got to polish it a bit. But a good innovation pipeline for both of these, expand the innovation pipeline. On the Organic India piece, I think the critical piece is, as I said, it was only 24,000 outlets. Getting it to our distributors, work has already started. Expanding the distribution and jump shifting the top line. I think those would be the big focuses.
Well, you're speaking a lot of qualitative details here, Mr. D'Souza. I just wanted to know, if around 1,200 crores, which is about 100 crore per month, possible for Ching's in, rather, Capital Foods in FY25, and what's the aspirational revenue target for organic in FY25?
So let me put it this way, Mangalam. I think about 650 to 700 crores is where Capital Foods ended for the last year, given all the upheavals of the fact that they were in the market for a long time, and then we had a lot of channel correction, etc. I would say significant double-digit growth on Capital Foods is what we would be targeting. Organic India, including international, delivered about, I think, 350 crores of revenue. Again, substantial increase from there, substantial double-digit increase from there is what we're targeting. And you're absolutely right. When these two businesses come in, our percentage EBITDA margins would improve significantly. Capital Foods, already in the first 2 months, we're seeing gross margins more or less where we expected them, which is significant increase to what we have on our portfolio. Organic India goes one step further, especially with the supplement portfolio, etc. So we do expect overall margins and therefore EBITDA margins to jump significantly.
Narishko, when we spoke same time last year, you had given a guidance of about 1,000 crores for FY24. Obviously, because of seasonal issues, etc., you're short of that, around 825. What's a realistic target for Narishko in FY25?
So Narishko remains on a very, very strong wicket, Mangalam. We've added about 50% more outlets from where we started for the year. Our innovation is now 20% of their revenue. We had guided for 900 to 1,000 crores for the year, but ultimately fell a little bit short because, it's a very anecdotal piece. In India, especially in the north, summer starts when Holi starts, and Holi was about 20 days behind where it was last year. So I would, and this has been a good summer so far. So I would expect top line growth to be significant. 30% plus would be the guidance for us going forward.
All right, so around 1,200 crores is what we're looking at in Narishko. For Starbucks, I mean, again, fourth quarter, 7% growth as against the full year growth of 12%. Are you expecting it to pick up at some point?
Starbucks, overall, if you look at the QSR space in India, Mangalam, it's run through a slightly rough patch in Q3, Q4. Overall, traffic has been the issue, not as much as average ticket. But we remain focused on the longer term opportunity for Starbucks in India. Yes, overall revenue growth was a bit tepid. But the good part is March was better than February in terms of traffic in outlets, and April so far has been better than March. So we remain confident that this business will come back.
At 1,000 stores by end FY28, would it make sense to list Tata Starbucks separately outside of TCPL?
So Mangalam, right now our task is cut out to deliver those 1,000 stores by FY28 and a profitable business at that. We remain focused on that. We will take decisions on what we want to do longer term at a later point in time.
Take that point. Mr. D'Souza, you've given us targets for the entire year, double-digit revenue growth, margins upwards of 15.3%, 30% growth in your growth businesses, 30% growth for Narishko as well, and sharp double-digit growth for both your acquisitions with increased margins. Final question then, and this one's more on the regulatory front. We've seen a lot more news around, spices, food regulators coming in for prepared dishes, etc., the quantum of sugar. Would you have any comment on this to make from where you stand at a portfolio level? Would there be a risk for some of your products on this as well?
So a couple of points on that, Mangalam. As the economy develops, as consumers become more aware, we would expect our regulatory standards to go up. So it's no surprise that it is starting to pick up, number one. Number two, we are Tata company. We're very, very clear that we will follow regulations very, very clearly. Most importantly, we've set ourselves a very clear nutritional policy in all our products, making sure that what we offer to consumers is in line with long-term aspirations. A. B, making sure that our quality standards are top-notch. And that's one of the reasons why I would say Sampann delivers what it delivers in terms of growth numbers, right? Because it's fundamental. The Tata name denotes trust, and we will deliver that trust to consumers.
Take that point. Thank you so much for joining in. Wish you good luck for FY25.
Thank you.
Well, interesting chat there, Mangalam, with the management of Tata Consumer. For the time being, though, we'll slip into a short break. As we do that, we have an announcement to share with all of you. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate, Personal Finance Handbook, with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th of May, 9 a.m. onwards. Well, we'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. That's lots to learn and lots to do. So whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so don't miss the chance. Register now, scan that QR code to register, or log on to cnbctv18.com, and we'll see you on the 11th of May.
Holding well for the market. Biocon is one of the stocks which has moved to the high point of trade from the broader markets, and a bunch of other stocks as well in focus. One of them is MCX, reeling under pressure after missing analyst estimates for their fourth quarter numbers. Vamakshi joins in with the details, the granular details on MCX's numbers. Vamakshi.
Well, absolutely, Mangalam. Like you rightly pointed out, MCX has missed out on the analyst expectations, but nevertheless, they've witnessed a sequential growth as far as the operational performance and the profitability is concerned. Let me first take you through the numbers. Revenue was down 5% sequentially, but the operational performance has improved sequentially, and this is because the expenses are lower, down nearly 58%, and this is largely being driven by a nearly 84% 4% sequential downtick as far as the software expenses are concerned, given that the company has now fully transitioned to the TCS core operating software from 63 moons earlier. In fact, in the fourth quarter, software expenses mainly relate to other licenses and the TCS fee is negligible. And in fact, we had already pointed out to our viewers back in November 2023 about this news break. EBITDA and profit for the company are at multi-quarter high. EBITDA, the company has reported a profit of around 102 crores as compared to a loss of 20 crores sequentially. Net profit, the company has managed to report a net profit after nearly reporting 2 consecutive quarters of losses. The operational metrics, however, are a bit mixed. The average daily turnover for futures is up 18% sequentially, but the same for options is down nearly 16%. Overall, the company's numbers have missed out on street expectations. In fact, Morgan Stanley points out that the net profit was much lower as compared to the consensus as well as Morgan Stanley estimates. Operating revenue was lower than estimates, but the operating costs were higher. So overall, Morgan Stanley has an underweight call on MCX with a target price of 2,085. So given miss on street expectations, the stock is reeling under pressure.
Okay, Vamakshay, thanks a lot for that. Well, let's focus on the pharma space. Lupin is under some pressure, Zydus as well as reacting to news flow. Ekta joins us to fill us in with details on both those two. Ekta, take it away.
Thanks for that. Well, yes, the news is that a US court has now issued a temporary restraining order against Lupin and Zydus from shipping further quantities of the generic version of the drug Mybetriq. Remember that they had just issued press releases around 2-3 days ago indicating a launch. Now, Lupin has launched the 25 mg version of this particular drug, and Zydus launched the 25 mg version and was going to launch the 50 mg version soon as well. Now, Lupin had indicated that the sales of the 25 mg version of this particular drug, which is used for overactive bladders, is $1 billion. So that's the kind of market that we were talking about in terms of a limited competition scenario as well. Now, because there is a temporary restraining order and there are litigations going on, it could probably result in an injunction against Lupin and Zydus, which may delay a launch. There could be a possible settlement which could take place and a launch by companies with limited competition and exclusivity going forward. So it's pretty much up in the air right now in terms of what could happen. Now, Elara, however, believes is quite optimistic. So they've said that the TRO came after the shipment of launch quantities already took place. So that should probably suffice for 2 to 3 months. They don't see an immediate impact on expected sales for either company from the drug, and they expect it to probably even be lifted, the temporary restraining order. And hence, the launch quantities should suffice, and then they could probably start shipping more. Now, they are estimating that Lupin could make around $35 to $40 million from this particular drug. Zydus could make $60 to $70 million from this particular drug. Zydus is down an additional amount as compared to Lupin, and the reason for that is that the US FDA conducted an inspection at the company's injectable site in Gujarat, and they've issued 10 observations to that particular facility. The inspection was from April 15 to April 23rd, and that's the reason you're seeing Zydus down 3%.
All right, Ekta, thanks a lot for that. So that's about the stocks from the pharmaceutical end in focus. Zydus more down than Lupin. With that, we're out of time on this edition of Chartbusters. From Nigel, me, the entire team, thank you so much for watching. But as we do that, here's a programming note for our viewers. Our Friday special offering, your favorite show, Editors Roundtable, is now coming at a new time. Catch the biggest market headlines of the week, expert analysis from market veterans, and also all our editors on Friday, as against 4:30 p.m. Now it's at 3:30 p.m. every Friday. Don't forget to tune in.